Hey everybody, Kristin LaVanway here. You know, every once in a while I like to pop in and give you guys kind of an update on what's going on with the Phoenix real estate market, and now seems like as good a time as any, so here we go. What's happening right now is seasonally, this happens every year, is our listings count starts to go up, and it's going up as it does every year. However, the demand isn't really going up. So we're getting a little, just don't get excited, but there's a little bit of a shift towards the buyer's advantage. The price range between $150,000 and $250,000 right now is still very hot. Now below $150,000 is technically hot, it's just there's not that much inventory in that price range. Most people are shopping in that $150,000 to $250,000 range, and in that price range there's really not enough supply to go around in a lot of areas. It's not true across the board, but in a lot of areas it's true. Avondale, for example, has been a raging inferno for quite some time because there's a lot of value in the homes out there. That raging inferno has been downgraded to just a regular inferno. It's starting to cool off a little bit because of the demand not increasing at the rate of the supply is. Anything higher than that, yeah, there's starting to be a little bit of shift. We're seeing a lot of price reductions as sellers are coming in, putting their houses on the market and being way too optimistic, and overpricing your house right out of the gate right now is not a good idea. It's going to end up costing you money. Usually the luxury market heats up this time of year, but this year might be a little different. Thanks to the stock market, which has been sort of a killjoy lately. And speaking of the stock market, people have been asking me lately, hey Kristin, how is the stock market going to affect the real estate market? Not a lot, granted, but a few. I could go ask my magic 8-ball, but I think I can give you a little more logical explanation than that. The commodities market lately has, well, basically kind of sucked. Prices are going down in a lot of areas, oil, metals, grains, things like that. And so any of the producing regions are taking a hit. Now, it just so happens that we're more consumers here in Arizona than producers, and so we're kind of reaping the benefits of the lower prices. I mean, seriously, who's going to complain about lower gas prices, right? So it's not going to have an immediate impact on the Arizona market other than those people who are from out of state or out of the region who own homes here. They're going to be doing probably more selling than buying. Interest rates have been impacted by this, and not in the way you might think. If you remember back in December, the feds decided to raise the interest rate. They raised it 0.25%, and everybody was thinking, okay, this is the end of the world, but it wasn't. And what's actually happening is that interest rates right now, mortgage interest rates, are slightly lower than they were back in December. Why? Well, one of the explanations might be that investors who are kind of not super happy with the stock market are moving some of their funds into bonds. And the mortgage rates tend to follow the 10-year T-bills more than they do any sort of stock index. With more money moving into the bond market, mortgage interest rates are going down. That's just the way it works. You would think with the slightly lower interest rates, it would spur some buying, but it's not. Buyers right now are being really, really conservative, taking their time, thinking, well, maybe I'll just rent a few more months. If you ask me, that's insane because the prices are going to continue to go up. But that's just me. I need to ask my magic 8-ball that. That's just the way it is. All right, so what does it mean in a nutshell for 2016? Well, it's probably going to be a pretty healthy year. Probably a little bit on the boring side. If you're a seller, you need to really be mindful when you put your house on the market. If you're in that $150,000 to $250,000 range, yeah, you're gonna get that house sold, a little bit easier, but at the right price. Buyers just are not going to pay more than the house is worth. And for everybody, if you don't price it right, you're gonna end up putting less money in your pocket. That's just the way it's gonna work. For buyers, when you're out there, know that if you're in that $150,000 to $250,000 range, there's other people looking at the house. So if it's a new house on the market, be strong, put in a strong offer, don't dilly-dally. If it's a house that's been on the market for a while or in any other price range, really look hard at that listing price, make sure that it's in market value, and don't spend more. Challenge the seller if you think that price is too high. That's all I got for you today. If you have any questions, if you'd like me to consult my magic 8-ball for your next stock purchase, well, you know where to find me, Kristin at HereInPhoenix.com. That's where. Go out there and make it a great day.